Okay, good afternoon, everyone. Thank you so much for spending your valuable lunch time attending this webinar. Really appreciate it. My name is Jeff from Retail Marketing and Investment Bank. Ladies and gentlemen, this webinar is about Yangzijiang Financial, an asset management company backed by one of the largest shipbuilding company, Yangzijiang Shipbuilding. Okay, facts for the company listed in the SGX mainboard under code YF8 with total of 4.1 billion Sing dollar asset under management as of December 2022. 43% dividend payout ratio for FY 2022, and most recent dividend declared in March with around 4.7% dividend yield. And there's a ongoing share buyback program, which I believe will benefit the shareholders. Now is with me is Ms. Liu Hua and Mr. Ang. She has joined the company, Ms. Liu Hua. She has joined the company in 2007 and was redesignated as the Chief Financial Officer of the group in June 2008. She will be the one who presented more details about the company and tell us why you should start to look into this undervalued gems. And Mr. Ang will present the slide to introduce the company, about the background and some of the facts, a deep dive about the company. So, Mr. Ang, are you ready?
Yes, thanks Jeff for the very warm welcome as well as the introduction. Thanks everyone for taking time off to attend this corporate presentation. So I've shared my screen. On the screen, we are now talking about the Yangzijiang Financial Holdings. It is actually a spin-off of the investment arm of Yangzijiang Shipbuilding, which was established in April 2022. And as Jeff mentioned, is an established investment manager with about $4.2 billion of AUM, Singapore dollars, of AUM as of December 2022. Now I just bring you through what we'll cover today. Basically a corporate overview, as well just a very quick understanding of the FY22 financial results. And then we go deep dive into the investment management and the three segments that Yangzijiang Financial has, mainly investment management, fund and wealth management segments. And then we'll end off this corporate presentation with a Q&A with Liu Hua, who is Yangzijiang Financial's CFO and COO. So Jeff did give a very good introduction to the stock already. So basically, I just want to highlight that the dividend payout ratio for FY22 was at 43%, 3 percentage points higher than the dividend policy that they have, which is at 40%. I'd like to also highlight that Yangzijiang Financial has cumulatively bought back $113.6 million worth of shares since the mandate was approved by shareholders. Now, as mentioned, 3 main segments: investment management, fund management, and wealth management. So back on the share buyback program, Yangzijiang Financial is actually still currently an active buyer in the market, recently buying shares at about 33.5 cents a piece. This is really to show management's belief in the stock's overall fundamentals. But just to bring you through the management tier of the company, basically we have in key management, we have Chairman Ren Yuanling, as well as CEO and CIO Singapore, Mr. Toh, and Liu Hua, who is CFO and COO. In the investment teams across and risk management compliance, total have about quite a substantial amount of experience in the investment management space. So currently the group has 3 main business segments: investment management, fund management, and wealth management. At the initial stage, the company has established an investment management business, which looked into debt investments, microfinancing, direct investments, as well as fund investments. So this was the mainstay, the stable of the company's business in the beginning and they have since started to expand into the fund management and wealth management business accordingly. Management is particularly excited about the fund management and wealth management business, given the sharp rise of family offices in Singapore. So according to a recent KPMG report, more than half of Asia's family offices are currently operating in Singapore, giving management a wide addressable market. This provides for a good opportunity for the group's fund management and wealth management services to generate recurring revenue through fee income and advisory income. So just quickly bring you through our FY22 results, which was announced in March this year. As you can see, so our net profit was actually cut in half to 162 million on the back of lower total income. Now, this decrease in income was mainly due to fair value losses, as well as substantially lower dividend income. Additionally, interest income has also slipped. Now, this was really on the back of 2022 being a very unique year in which both equities and fixed income assets declined in value by approximately 20% on macro concerns both on the global basis as well as ongoing issues in China. Now, you can think of the Ukraine war, inflation, as well as rate hikes as the main causes of this issue, of this very unique return profile during 2022. Our net asset, as mentioned, so in the interest income, there was a slight decline on a 2H22 basis, and then we also saw some decline in the dividend income, mainly because our venture capital investments in China did not declare any dividend. So nonetheless, I would say that our net asset value remains very strong at about $1.05 as of December, which is a significant premium to our current share price of about 34 cents. And our assets currently consist mainly of debt investments and cash. Our equity portfolio is well diversified across all sectors, as you can see here, with machinery, manufacturing, and metals and mining taking up probably the largest share of the pie. So on our debt investments, more than about 87% of our debt investments are due within the year, and they are also significantly diversified across sectors and well backed by various collaterals. As you can see here, in as of 31st December 2022, a substantial amount, 45% of our PRC debt investments are backed by land and properties, real estate, and our coverage ratios continue to be at very good levels, above more than 1.5. So maybe you can also see that actually in FY22 our NPL ratio actually jumped quite a bit. Now this is largely due to our conservative NPL recognition policy, where we have traditionally recorded a very high NPL ratio, which take a more prudent stance in highlighting loans that has the potential to go bad and actively initiate actions to recover these bad debts. Hence, as you can see in the middle and in the right chart, the utilization of allowance for impairment loss is actually very, very low because of our proactive as well as early mitigating actions to recover bad loans. So by risk, we basically separate our debt investment portfolio into 3 separate containers: performing loans, underperforming, as well as non-performing. So in a non-performing, principal and interest payments are actually past due. There are some significant issues there, but management would really take very specific actions to go and try and remedy the issues, and also to recover any debt. So I move on to really talk a little bit more about each segment, particularly in the investment management segment side itself. So prior to spin-off, the group was primarily focused on investments in China, in particular debt investments. So going forward, the group actually intends to reduce its debt investments and increase its investments in Singapore. As you can see, the management is already making some headway in this respect, and we continue to expect this trend to continue. So as you can see, the debt investments, we have already cut down quite a bit from previously at 83%, is now only 62% as of 31st December. And the portfolio by geography as well. Right now, Singapore accounts for 13% of our total portfolio. Most of the assets in Singapore are in cash and denominated in USD. As you might already know, the DXY is at significant highs right now. So this is actually good for the company when we ultimately deploy the capital. So in November 2022, the group was actually awarded a liquidity pool scheme by the PBOC. Now this enables us to grant intercompany transfers of up to 10 billion RMB and allows us to efficiently deploy capital in and out of China through intra-group transfers. And this facilitates our aim of reallocating funds outside of China. So our investment key focuses in China right now is very much into clean energy, capital markets, as well as logistics for the mining sector. On the global front, we have a Maritime Fund, which looks into ship financing and the facilitation of sales and leaseback of vessels, as well as investments in vessels and ship chartering business. Now, this goes back really to our core competency in the ship building and ship chartering business. And beyond China, really looking at the capital markets outside of China through direct investments, funds, as well as the previously mentioned the wealth management and fund management segments. So just going to talk a little bit more about our Maritime Fund. Our Maritime Fund is expected to hit up to $500 million in AUM, and we are looking to generate a steady stream of income in maritime assets, including vessels, for the purpose of leasing, chartering, and or the sale and providing financing to SMEs for shipbuilding. Up to 200 million will be funded by Yangzijiang Financial itself, and the remaining will be raised from investors and through bank loan structured financings. So as the assets that we're looking at include oil tankers, gas carriers, bulk carriers, things that are fairly in our comfort zone and in our core competency from the Yangzijiang. Next, I'll move on to fund management and wealth management. So in terms of the fund management and wealth management business, the group actually intends to generate additional source of recurring income by growing these two segments. So we have previously signed an agreement to provide investment advisory services for a family office of up with an AUM of $500 million. And we have also announced the launch of a few new funds, including a Maritime Fund, the Gem Growth Fund in 2022, where we will earn recurring management fees, advisory income from providing services to these third parties. Now, just very quickly, I'll just bring you through to the summary. Our stock currently is very attractively priced at just 0.3 times PB, as it has been affected previously by concerns over the Chinese economy and a transitionary year for the group as we diversify our investments overseas. Nonetheless, we have built a team of professional industry experts, as highlighted earlier in the slides, and we intend to diversify across asset classes and geographies through a three-pronged strategy of either investing through a co-GP fund, through third parties such as a top-tier PE and private credit funds, as well as generating recurring income through wealth management. Now, this all will be done with the aim of generating good returns for our shareholders and a sustainable dividend yield for them. We have actually pledged to pay out at least 40% of our profits as dividends with our share and we also have a share buyback program, of which we have acquired at least 8.2% of shares thus far. So we have come to the end of the presentation. I didn't want to have too many too much slides here, because I think the main gist would be for the audience, yourself, to engage with us through our Q&A session, so that we can answer any queries that you might have on the company.
Thank you, Mr. Ang, and thank you for the good presentation. And here with me is Ms. Liu Hua to answer all the questions. Hi, Ms. Liu Hua.
Hi. Yes, I'm here to answer your questions if you have any. And of course, thanks for Mr. Ang to give a summary overall. And I guess on the slide itself, there's many information. I mean, there's a lot of information there. But I think for those who attend today's meetings, I think the key questions usually when I meet the investors, and I think the key few questions that they would like to ask first is about our debt investments in China. We all quite concerned about and the economies. I mean, that whether how this will affect our investments in China, especially for our private credits in China. So especially I mean, that this company is spin off from the Yangzijiang Shipbuilding, and at the time of the spin off, and about close to 85% is the financial asset that's spin off from the Yangzijiang Shipbuilding, and with another 15% of the cash. So over the past year of the operations, and we gradually has shift some of the cash assets from China to Singapore, start to deploy in Singapore. But nevertheless, and majority of the financial asset in this company, Yangzijiang Financial, is still lying in the private credits in China. So especially private credit in China, part of that is from our investments in the real estate sector. So of course, people may concern, and those non-performings, and loans that happening due to the real estate sectors in China, and actually the coming out. I mean the industry, real estate industry actually quite badly impacted during the COVID, and so how is the status? And I guess this one, all you can see, with the reopening of the China economy, yes, we do working very and closely with our underlying borrowers, to see how we were able to resolve this non-performing ratio, non-performing loan. However, given that the situations in China now, we see the job rate is pretty high, and we are still working very closely, and hope that we were able to bring you some good news, and the near months. And on top of it, we also see there's the economic sides, in China, they are actually slowing down, not only for the real estate sector, but for other sectors also being impacted. And the job loss rate in China is pretty high. So we will see the economy actually has been deteriorated from real estate sectors to other sectors as well. So so this may, as for the non-performing ratios, could be here for a while. However, because that for these private credits investments we have a quite good and the coverage ratio, so that even though there's a non-performing, but we will take necessary actions and against the underlying borrower. so that, you know, and eventually, as what you can see from the past, I think there's some slide shows that. So the actual loss is remain very low, even though there's always a high NPL ratio, but actual loss could be quite low, given that we were actually able to get hold of the assets, you know, and the collateral that is, we are able to get hold of it, and we will eventually, you know, and get back our principal and the accrued interest at the time of the disposal of the assets. So it's only, it could take longer, you know, longer horizon, to go through the court proceedings, and as well as like if you want to dispose the underlying assets, it will also subject to some economic, you know, and you know, situations in China. They need to have you know, ready buyer who wants to take advantage of this, you know, to buy over the distressed assets. So this we will continue to monitor the China economy. So this is something that I think the biggest concerns at the moment, you know, for the investment that currently invested by the company in China. So this is already about 60% of our, you know, total investment portfolio, our own proprietary fund. Bearing in mind of this, it is what for, I mean, everybody should know that for Yangzijiang Financial is debt free, and basically we are investing 100% of our own proprietary fund, and we don't borrow. Yeah, the share price is traded about 0.3 times of the book, as Mr. Ng just highlight. So 20% are cash at the moment. So 20% are equity, and 60% private credit. So basically, I think the market is already in a huge discount, taking the, you know, taking the view that, I mean, if you talk about on book basis, it's basically they are taking the view that the entire credits, you know, the private credits in China, our credit, you know, asset that basically they take it as that is non-recoverable. But this is definitely not the case, given that our experience in investing into private credits in China is only, it takes a bit more time. And on top of it, for the private credit and non-performing rate, non-performing loan is not 100% of our investments in China. So it's only a portion of it, and the actual losses are low. Other than this, we will have private equities in China. In the past year, we do see, and last year, we do see there's some signs of the recovery in terms of private credits and the public private equities and the public equities. You know, we invest in various funds in China. We see some valuation recovery. And this year, we see a further improvement for our investments. And so this actually, gradually, we also want to exit from these investments, and we want to gradually shift these funds into Singapore, and we want to invest from Singapore for our Maritime Fund. And this will be, in the future, will be one of the key focus for the companies to invest, given that we all know that the company, the chairman is having you know, and the decades of the knowledge in the shipbuilding industry and this maritime industry. So they with, you know, recovery of those assets, that, you know, liquidate those assets. And the next focus, it will be definitely, we want to go into a more you know, experienced area, which is like maritime focus. So that, as you know, the maritime, it do needs a lot of investments as well. So so this is a strategy that the company now wants to focus, but this strategy will definitely take time, you know, to deploy stage by stage. And we will be looking at the timing and the right projects, and gradually and putting our capital into these areas. So this basically is a strategy shift from what we are having in China in private credit, and to gradually into global basis in the maritime sectors. Yeah. So the other things about our asset that just now we also highlight is about the cash. Cash, we will make use of our liquidity pool, and which you know, we are able to freely you know, and transfer in and out of the funds from China for our cash, you know, from renminbi convert into US dollar, and in order to enjoy a better yield. outside of the China. So at the moment, we know that if we place those US dollar into timetable C and into some sort of like a senior investment grade bond, we will easily is able to reach around 5 to 6% yield. And on top of it, we will do some and so for this liquidity pool, it facilitates our returns from the cash that we are holding in our portfolios. So we don't need to place our RMB in China to have that China is actually cut down the interest rate, so that the return, if we keep it in, the cash, if we continue to keep it in China, we were only able to fetch about 2 to 3% per annum. Now then, we were able to effectively enhance our interest rate, returns to the shareholder, returns to the group. So additional 3% returns, and for the cash that we were able to generate, is we were able to bring it to offshore Singapore here to manage it as a global, as a overall, treasury function for the group. So and this basically this is the asset that company currently manage. And I think just now we also touched on some management, the asset management business, and we are looking at I think at the moment, one of the, as we all know that now fundraising is not easy, especially for the financial sector. So I think one of the key focus for us, we will still build our track record for our Maritime Fund. At the same time, we will, and leverage our expertise in this industry with our data, with our information. At the same time, we do have our, and the sister companies that is in shipbuilding business is able to provide additional comfort and way it comes into invest into the Maritime Fund. Given that we will be able to have lots of and the networks that being established by the chairman, that we were able to work together with not only our sister company and also with other shipyards as well, and the shipping companies and the shareholders. That just a brief and touch on some of the questions that you may concern, but I will definitely invite the questions that from the good chats here.
Thank you, Ms. Li Hua. Thank you for the deep dive of the information. So I think the first question already been answered, which is, if I'm not mistaken, is 60% portfolio invested in China. So the second question is, how do you view ESG? Do you have any ESG related investment?
Sorry, I couldn't hear the first questions. I hear that the second question is about ESG. What is the first questions?
Yeah, the first question is what is the percentage of the portfolio invested in China?
Okay, so at the moment, if we strip out the cash portion, which is about 20% of around 20% of our total our proprietary fund, and this one we don't differentiate whether it's onshore or offshore. For the asset that we invest out the apart, take away the 20%, the 80% now is I would say still the majority, around 65% of it is still in China and 15% is in Singapore. Invest from Singapore, yes.
Okay. The second question will be how do you view the ESG? Do you have any ESG related or ESG only investment?
I think ESG is definitely a must discuss topics nowadays. It comes into investments. So we we are new as a listed company, and they do have quite lots of regulation requirements by SGX, and we also start and we also new in and investing outside of China. And while we establish our teams in Singapore, and we and last year to do the investment outside of China, we already start to take into the consideration into this ESG sector, ESG factors. We already incorporate quite various ESG parameters into our when we comes to invest, putting our funds into the new investments. And as whether we will definitely if it's like eco-friendly projects, and we will be definitely have a more favorable and votes when it comes into the projects like this. And as for China, we you also know that China is also start to putting more attentions into these environmental concerns issues. So yes, we already know that this, and we has our board is also and indeed we already set up sustainability boards and to govern companies in this ESG govern the company from its investments comes into and governs the company comes to these ESG matters when dealing with the investments as well as our own operations. And we also start to and try to cut down the emissions and when we operate as well. So we already start to since last year to pay attention to this. And but as for the investment companies, what we can do at the moment is to from the operation fund and as for the investment fund to put more attention into this area.
Thank you, Ms. Liu Hua. Another question from the Mr. Chiu is, when is the two registered funds, GEM and Maritime, be launched?
Oh, okay. The register fund, the two fund. Okay. Firstly, for the Maritime Fund is already because internally we are using our own battery fund and some anchor some LPs and and we already has launched and start to invest. Whether we will be and start to launch officially to invite the third parties fund or and the external fund other than and the existing one, and this could happen. We are planning. We are actually preparing at the preparing stage for the fundraising. This could happen in the third quarter and the fourth quarter.
Thank you, Ms. Liu Hua. Next question is, I believe you have utilized over 80% of your fund for share buyback. Are you seeking for new mandate this quarter or next?
I think we definitely able to have more funds, I mean, able to utilize more because at the moment, after we obtain the new mandates, it's about 24 million shares being bought by the company. Our mandate is about 10% of 10% of the total outstanding shares. So I think we will definitely continue to do our share buyback, and to the company, this is definitely to us it's definitely undervalued. And since we are the and the asset manager, at the same time we are investing our own proprietary fund, it's always and very, very attractive for the company to invest into its own shares. Yeah, so but of course you have about 20% of the cash and you can buy up to 10%. You can always buy from the markets. Even now 33.5 and 34 or 40 cents. For us it's all and very attractive investments. But this company is a newly listed company, and the chairman and the entire executive team is looking to group the companies, and with its strategies, to gradually to go through this transition period and to become a so-called Asia leading, having his own unique and way of like investing, such as like in maritime sectors. So we will need to strike a balance between buy back your own shares and or seize the market opportunities to invest into the areas that you are good at. So we need to strike a balance. So whether we will be, and deploy more fund, definitely we will, if the share price, and it's still at current, and the attractive level. So long we are, operate within the mandate that given by the shareholders. Okay, so as for, why are you just buy all your monies, into the share buyback? I think this question is being asked before. I think my response is we need to strike a balance between the growth and growth and the of the companies as well. So some of the cash, and apart from we are doing now buyback, and we need to look at and invest into the right project, so that we were able to build our records in this space, so that we were able to win back the, we were able to win the build the track record and win the confidence from the investor, not only the shareholders, also investors into our funds.
Thank you, Ms. Li Hua. Now, next question is what is the latest book value? If not wrong, you picked the last year shown as comparison. So I mean the audience would like to know the latest book value.
I think this one we will announce it for our first half year's results together with our net book value. I would say if you talk about net book values in Sing dollar, we have to take into the consideration of the depreciation of the RMB against SGD, just a guidance, because Sing dollar is strengthened quite a bit this year against renminbi. Renminbi continue to depreciate, and so because our assets at the moment, financial assets, are mostly denominated in RMB. Yeah, because so when we do our reporting, this asset that denominated in RMB will be converted into Sing dollar at current market rates. Depends on when, if it's like reporting year end is reporting period end is 30th June, then it will be converted at that point of time based on the spots. So if that happens, the trend is like the more RMB appreciate, the NTA of the company denominated in SGD will be getting lower. Given that even the company is making profit, you were able to, but the actual fact that the currency has a play in this.
Okay, the next question is how are you going to use or tapping the latest technology like digital banking, and what will be your plan and progress on AI?
Sorry, I didn't pick up this one. Maybe I can look at this chat. Are you using tapping the latest digital? Oh, this is a different. Digital banking is a different topic. As we are asset manager, I think digital banking is something that we will be. It will be, if there's of course this could be one of the investment that we could make if the return and the risk is good. But this is definitely a trend. And as for the company to take on the technology itself, I would say as an asset manager, when we are managing our own proprietary fund, we don't think at the moment we will need such a technologies or for such as like digital banking and technology at the moment. Yeah, but we will keep an eye on these developments, and if there's any potential and the investment opportunities given us good returns, and then we will definitely investigate.
Okay, I think the next one is Mr. Chiu is asking about the GEMS.
Yeah. Share buyback. Okay. You mean management will seek for a mandate this year for future share buyback? Is this the questions? Of course. I mean, this is the mandate that usually is in one of our, and the agendas for the AGM, and the on yearly basis, and we has obtained this year. We will continue to do so because even though the share price is back to the at reasonable level, and I think it's never be a and the bad things for the company to have this to have the approval from the shareholder, so that in any event, even macroeconomy, and the share price impacted, or since we are in investment business, we don't want to we don't want to block ourselves from investing into our own shares. So we will continue to seek shareholders mandates on these share buybacks on yearly basis.
Yeah. There's a question that about the GEMS fund. Is it going to offer to the party?
GEM Asset is our asset managers. So for any funds that are, and the plan and the launch by the company and managed by the GEM Assets, if we want to do any fundraising, it will launch the fund, especially for what we are targeting for the Maritime Fund. It will be open to the parties, for them to subscribe into our fund.
Thank you, Ms. Liu. Audience, any other question? If there's no other question, then we shall end the session here. So as mentioned, YZJ Yangzijiang Financial is listed in SGX main board under code YF8. If anyone have inquiries and interested to invest in this amazing company, please contact your reminder or drop us an email. And again, thank you, Ms. Liu Hua and Mr. Ang. To your audience, have a nice day and happy investing. See you all at the future event. Thank you.
Thank you.
Bye-bye.
Thank you. Bye-bye.